Brad Williams. Frugal Finance, Basics of Futures Trading from the CFTC. A quick overview, a brief introduction. Commodities future contract is an agreement to buy or sell a particular commodity at a future date. The price and the amount of the commodity are fixed at the time of the agreement. Most contracts contemplate that the agreement will be fulfilled by actual delivery of the commodity. Some contracts allow cash settlement in lieu of delivery. Most contracts are liquidated before the delivery date. What does that mean? Right. You think orange juice is going to go through the roof, but you're not an orange juice squeezer. In other words, you're not a manufacturer of orange juice. You're a trader. You buy the futures contract in August of 2024 to expire in November. You buy it for $1. Just go with me on this one. There's a freeze in October. I don't know. How often is there a freeze in Florida in October? So there's an absolute decimation of oranges in Florida. Price skyrockets. You have until November till that contract expires. Now, do you take delivery of the orange juice? No. You're going to sell that contract for whatever the price is. Let's say it goes from $1 to $2. Well, then you sell it. That's the liquidation part of it. Now, if you're a orange juice manufacturer, then you may be buying contracts to hedge yourself against any possible freeze. Or maybe you want actual delivery in November. Well, you buy the October contract, then you force delivery when your contract expires. There's a lot of rules in regards to delivery. Very, very, very specific. And unless you're a pro, unless you do this every single day, don't even think about taking delivery of a particular commodity. A commodity futures option gives the purchaser the right to buy or sell a particular futures contract at a future date for a particular price. With limited exceptions, commodity futures and options must be traded through the exchange by person and firms who are registered with the CFTC. I used to be registered with the CFTC long ago. Typical users of the futures market. If you don't understand commodity, if you don't understand futures, if you don't understand the pricing delivery and all of the nuances related to futures trading, stay away. That's just my only advice, is stay away. It is extremely risky. You can lose everything in a blink. And option traders think they're cocky enough to walk over and start futures trading. Well, they'll find out really quick that there's a big division between options trading and trading futures contracts. Typical users of the futures market, most participants in the futures market are commercial or institutional commodity producers or consumers. Most participants are hedgers who trade futures to maximize the value of their assets and to reduce the risk of financial loss from price changes. I mentioned that, my orange juice example. Other participants are speculators who attempt to profit from price changes in futures contracts. They use the word speculator, and that's the best word that you can probably use in order to grasp how challenging it is trading futures. Regulations of futures professionals, companies and individuals who handle customer funds or give trading advice must register with the National Futures Association, a self-regulatory organization approved by the CFTC. The CFTC seeks to protect customers by requiring market risk and past performance to be disclosed to prospective customers, customer funds to be kept in accounts separate from their firm's own funds, and customer accounts to be adjusted to reflect each trading day's current market value at close. It's called mark to market. You need to put up a certain amount of money up front, but the beauty of futures trading is the leverage, and it works good and bad for both. You're going to find that leverage is a great thing when you're making money, but when you're losing money, it is disastrous. The CFTC also monitors registrants, supervision systems, internal controls, and sales practice compliance program. Very, very strict this is. Very strict. It's not something you can go in and wing-ding. The NFA provides detailed information for traders. Please visit here's a link. And again, this information will be linked below. Before you purchase commodity futures or options contracts, consider your financial experience, goals, and financial resources. Know how much you can afford to lose above and beyond your initial investment. Understand all the obligations for any contracts that you purchase. thoroughly review the risk disclosure documents that are required to be provided by the broker, know whom to contact with a problem or question, ask questions and gather information before opening a trading account. So here is my only word of advice. When you're talking to a broker, say, give me your CFTC number. There are a lot of scammers out there, and I report this day in and day out on just overwhelming number of videos that I have available. If you're talking to someone, ask them straight up, who do you work for? And give me your CFTC number. How long you been doing this, et cetera, et cetera. Then you're going to go to CFTC and you're going to verify that the information is accurate. Then you're going to call up to the CFTC and say, look, I kind of think this guy or gal is fishy. I don't really trust this person. Find out if there's any complaints. Find out their history. Speculating in commodities, futures, and options is volatile, complex, and risky. Let me repeat that. Speculating in commodities, futures, and options is a volatile, complex, and risky venture that is rarely suitable for individual investors or retail customers. This is coming from the CFTC. Many individuals lose all of their money and can be required to pay more than they invested initially. Got that? You've been advised. This is the big boy game. You don't know what you're doing, step away. Don't even play this game. You can lose millions in a matter of seconds if you do something absolutely backwards and go, oops. Well, there are no oops with the CFTC. You're on the hook. Brad Williams, Frugal Finance. Thanks for watching.